Let's start with the basics. In the world of sportswear, two names are making headlines for very different reasons. On one side, we have Anta Sports, the biggest sportswear company in China, and a brand that's been growing at a remarkable pace. Anta began in the 1990s and has quietly built a global empire, owning not just their own brand, but a collection of others. Their portfolio includes some of the world's most recognized sports labels, and their influence is spreading far beyond China's borders. They're ambitious, smart, and have a proven record of success. Anta's leadership is known for bold moves and a relentless drive to innovate. On the other side is Puma, a classic German brand founded in 1948, known worldwide for its leaping cat logo and sporting heritage. Puma has been a staple in the world of athletics and fashion for decades. Puma is iconic, but fame doesn't guarantee business success. Despite its legacy, the brand has faced challenges in recent years, struggling to maintain its edge. Lately, Puma has struggled to keep up with fierce competition and needs a new strategy. The market is evolving, and Puma knows it must adapt to survive. So we have two very different companies: Anta, a rising Eastern powerhouse, and Puma, a Western legend in need of a boost. Their paths are about to cross in a way that could change both their futures. Anta has mastered China and now wants to go global. Their sights are set on new markets, and they're ready to take bold steps. Puma, with its rich history, is searching for a fresh start. The brand is eager to reinvent itself and reclaim its place at the top. This sets the stage for a fascinating partnership: the ambitious newcomer and the legendary brand-seeking revival. Together, they hope to create something greater than the sum of their parts. It's a classic story of change in global business. When East meets West, the possibilities are endless. The stakes are high, and the outcome could reshape the industry. Investors, competitors, and fans are all watching closely. Let's see how this unlikely duo came together and what their partnership could mean for the future of sportswear. Here's what went down. The business world was abuzz with speculation, but the details are even more fascinating than the rumors. On January 27, 2026, Anta Sports, a major Chinese sportswear giant, announced it was buying a massive 29.06% stake in Puma, the iconic German brand. This instantly made Anta Puma's largest shareholder, a bold move that sent shockwaves through the global sportswear industry and signaled Anta's serious international ambitions. The seller? Artémis, the investment firm of the French Pinault family, renowned for their ownership of luxury brands like Gucci and Saint Laurent. The price tag? A staggering $1.5 billion, or about $1.8 billion, paid entirely in cash. No loans, no stock swaps, just pure financial muscle. Anta paid $35 per share, a whopping 62% premium over Puma's market price at the time, showing just how much they wanted in. This wasn't a hostile takeover, but a carefully negotiated deal, with both sides agreeing on the terms after months of discussions. Anta isn't aiming for full ownership, just enough influence to help steer Puma's direction and strategy. With this stake, Anta secures seats on Puma's board, gaining a direct say in the company's future and a front-row seat to all major decisions. The deal is straightforward: cash for control, with both companies hoping to benefit from the partnership. Anta's willingness to pay top dollar shows just how much they value this opportunity to expand their global reach. They're not just investing, they're positioning themselves to shape Puma's destiny and influence the future of sportswear. For Puma, this means a powerful new partner at the table, bringing fresh ideas and resources. For Anta, it's a ticket to the global big leagues, opening doors to new markets and collaborations. The stage is set for a new chapter in sportswear, with both companies ready to make their mark on the world stage. Why did Anta spend so much on Puma? The answer is simple: China. But it's not just about making a splash. It's about seizing a massive opportunity in one of the world's fastest-growing markets. China's middle class is booming, with millions of new consumers eager for global brands. Yet, only 7% of Puma's sales come from China, a huge missed opportunity for such a well-known name. Anta knows the Chinese market inside out. With years of experience and deep local connections, they plan to use their expertise to supercharge Puma's sales and brand presence. They'll help Puma connect with Chinese consumers in ways the German brand couldn't manage alone, from tailored marketing to product designs that fit local tastes. But this isn't just about China. The partnership opens doors to new markets and fresh opportunities across Asia and beyond. Anta wants to be a global player, and owning a big piece of Puma gives them instant credibility and recognition on the world stage. With board seats, Anta will actively shape Puma's strategy, sharing insights on manufacturing, supply chains, and branding, helping both companies learn from each other. Their goal is clear: turn Puma's small China presence into a major growth engine, driving sales and brand loyalty to new heights. Globally, Anta's influence could help revitalize Puma's image and operations, making it more competitive in the crowded sportswear market. This is more than an investment. It's a strategic partnership designed to drive growth from the inside, blending local expertise with global ambition. Anta's local know-how and global ambition could be the boost Puma needs to reach new heights and audiences. The world will be watching as these two giants join forces to shape the future of sportswear. So why did Artémis, the Pinault family's firm, sell its Puma stake? The main reason: debt. Selling brought in $1.5 billion in cash, helping pay down what they owed. Strategically, Artémis wants to focus on businesses it fully controls. Puma was always an outlier in their luxury-focused portfolio. The sale fits their shift toward high-end brands and away from mass-market sportswear. They got a great price, a 62% premium, and can now reinvest in luxury. For Artémis, it's a win-win: financial relief and a sharper business focus. For Anta, it's the perfect entry point. To see why this deal matters, look at Puma's recent struggles. The sportswear market is dominated by Nike and Adidas, with new brands snapping at their heels. Puma has lost ground, missing the mark with recent product launches and lacking buzz. The company's response? Major job cuts and a new CEO, Arthur Hold, who launched a turnaround plan in late 2025. But turnarounds take time, and Puma's financials are under scrutiny. Anta isn't buying a champion, they're investing in a brand with potential and problems. They see opportunity where others see risk. With Anta's investment and expertise, Puma hopes to reignite its spark. The new partnership could be the catalyst for a comeback. Anta is betting on a turnaround and on their ability to help make it happen. For Puma, this is a lifeline. For Anta, it's a chance to prove their magic touch. Anta has a track record of reviving struggling Western brands. Their biggest success? Fila. Anta bought Fila's China rights and turned it into a fashion powerhouse. They're also the largest shareholder in Anta Sports, which owns Salomon, Arc'teryx, and Wilson. Under Anta, Salomon went from niche hiking brand to global fashion sneaker favorite. Anta knows how to spot hidden potential and unlock it. Their formula: respect heritage, inject new energy, and connect with modern consumers. This history fuels optimism for Puma's future. Anta brings more than money. They bring expertise in marketing, distribution, and design. If anyone can help Puma roar again, it's Anta. Announcing the deal is just the start. Now come the approvals. Antitrust regulators in multiple countries must sign off to ensure fair competition. Anta's shareholders also need to approve the $1.5 billion spend. Legal and regulatory checks could take months, but both sides are confident. Once cleared, Anta will officially own 29% of Puma. That's when the real work begins, integrating Anta's vision into Puma's strategy. The partnership will move from paperwork to action. Once the deal closes, Anta will take seats on Puma's board. This brings fresh expertise, especially in China, where Puma needs help most. Anta's board members will guide marketing, retail, and product strategy for Chinese consumers. But their influence will go further, sharing best practices in supply chain and efficiency. Cultural differences may arise, but collaboration is key. If Puma's heritage and Anta's business savvy align, the results could be powerful. The partnership could transform Puma's global fortunes. It's a new era for both companies. This deal is more than a business transaction. It's a game changer for the sportswear industry. A Chinese company now leads one of Europe's most iconic brands, signaling a shift in global power. Anta's bold strategy and Artemis's smart exit show how capital and influence move in today's world. For Puma, Anta's backing could mean a real shot at challenging Nike and Adidas again. For consumers, it promises more innovation and choice. The sleeping cat might just wake up and roar. This is about ambition, strategy, and the changing face of global business. The game has changed, and everyone's watching.